Welcome back to Prime Wealth. I'm Jordan.
And I'm Alex. We're really glad you're here with us today.
Yeah, absolutely. So today we're diving into something really exciting. The concept of the dividend snowball.
Right. It's such an interesting way to think about growing your income over time, isn't it?
Totally. I mean, who doesn't want a little extra cash flow, especially as we look towards retirement,
Exactly. And the beauty of this strategy is that it can really help you build wealth without needing to constantly monitor the market, right?
Yeah, it's like setting a snowball rolling down a hill. It just gets bigger and bigger as time goes on.
And today, we'll explore how you can start your own dividend snowball, the best practices for selecting those dividend stocks, and how patience really pays off.
Plus, we'll share some real-life examples of folks who've used this approach to boost their income. It's super inspiring.
For sure. So if you're curious about how to make your money work for you over time, you're in the right place.
Absolutely. Grab a cup of coffee, settle in, and let's get rolling with our first point. So Alex, I've been thinking, with everything going on in the world right now, especially for folks over 40, it really feels like this is the perfect time to talk about the dividend snowball, right?
Absolutely, Jordan. I mean, if you look at the statistics, many people in their 40s and 50s are feeling the pressure when it comes to retirement savings. I read a report recently that said nearly 40% of adults over 40 have less than $50,000 saved for retirement. That's a pretty daunting figure.
Wow, that's really eye-opening. And I think it hits home for a lot of people. I mean, they might feel like they're running out of time,
Exactly. And it's not just about the numbers, but also the emotional impact. When you start thinking about retirement, you can feel overwhelmed by all the things you still want to do, but it feels like the clock is ticking.
Right. It's that combination of wanting to enjoy life now while also planning for a future that feels uncertain. So how does the dividend snowball fit into all of this?
Well, the dividend snowball is a fantastic strategy. It's about investing in dividend-paying stocks that grow over time. So if you start now, you can build a steady stream of income that can actually help ease those retirement worries.
That's a great point. And, it's not just for people who have a ton of money to invest. Even small, consistent investments can really add up.
Exactly. I mean, let's say someone starting at 40 decides to invest just $100 a month into dividend stocks. Over time, thanks to compounding, they could potentially build a significant income stream by the time they reach retirement.
That's a really relatable example. I think a lot of people underestimate the power of compounding. I mean, it's like planting a tree, right? The earlier you plant it, the more time it has to grow.
Yes. And once that tree starts bearing fruit, it just keeps getting bigger. You can reinvest those dividends, which creates more dividends. And that's how the snowball effect happens.
It sounds so simple when you put it that way, but I think many people feel intimidated by investing. They might think, I don't know anything about the stock market.
That's totally understandable. But it's important to remember that investing doesn't have to be complicated. There are plenty of resources out there. And starting with dividend stocks is often seen as a safer option. You're getting paid to wait while the company grows.
Right, and that's such a comforting thought. You're not just throwing money into a black hole. You're actually getting something back, which feels more secure.
Exactly. And think about it. Many people over 40 are at a stage in life where they might have more disposable income. Maybe their kids are getting older, or they're not spending as much on things like vacations or big purchases.
So, it's a great time to shift that money into something that can work for them. I remember talking to a friend who started investing small amounts in dividends just to see what would happen, and she was amazed at how quickly her portfolio grew.
That's a perfect example. And it's about changing the mindset. Instead of thinking, I can't afford to invest, it's about realizing I can start small, and that's okay.
And I think there's also something really empowering about taking control of your financial future, especially as you approach retirement age. It can help reduce anxiety.
Absolutely. Knowing you have a plan can really change how you feel about the future. You're not just waiting for Social Security or a pension. You're actively building your own income stream.
And let's not forget the impact of inflation, too. With prices rising, having a reliable income source becomes even more crucial.
Yes, inflation is a huge factor. And dividends tend to grow over time, often outpacing inflation. This means that not only are you receiving income, but that income can increase, helping to maintain your purchasing power.
So it's really about looking ahead and thinking strategically. I mean, people over 40 have so much life experience and wisdom, and applying that to finances can really make a difference.
Definitely. And it's never too late to start, even if someone feels behind. Taking those first steps can be incredibly powerful.
And I love how the Dividend Snowball allows for flexibility. You can adjust your contributions based on your financial situation at different life stages.
Right. And as life changes, so can your investment strategy. Plus, watching that snowball grow can be really motivating. It's like a visual representation of your progress.
Exactly. And I think that's key. Seeing those dividends come in and knowing they're working for you can really boost confidence, you know?
For sure. And it's about building a lifestyle that supports your goals. If you can set up a system where money is working for you, it can lead to more freedom in your life.
So to wrap up this section, it really seems that understanding and utilizing the Dividend Snowball could be a game changer for people over 40.
Absolutely, Jordan. By taking control of their investments now, they can create a brighter, more secure future.
And with that, let's dive into some core strategies to get started on that journey. So Alex, today I really want to dive into this concept of the Dividend Snowball. It sounds intriguing, right?
Absolutely, Jordan. The dividend snowball is a fantastic way to think about growing your income over time. And it's especially useful for people, over 40 who are planning for retirement or just want to boost their cash flow.
Right. So let's break it down. What exactly is a dividend snowball?
Well, at its core, it's the idea of reinvesting dividends from stocks you own to buy more shares, which then generates even more dividends.
Okay, so it's kind of like a snowball effect, right? You start small, and it just keeps growing?
Exactly. So let's say you invest in a company that pays a dividend of, let's say, $1 per share. If you own 100 shares, you'd get $100 in dividends.
Got it. And then you take that $100 and buy more shares.
Right. So if you reinvest that $100 and the stock price is, say, $10 per share, you can buy 10 more shares.
So now you have 110 shares, and next time you get dividends, it's based on that larger number.
Exactly. And if that company increases its dividend over time, your income increases too. It's like a cycle. The more shares you own, the more dividends you earn, and it just keeps building.
That sounds super empowering. But how do you choose the right stocks for this strategy?
Great question. You want to look for companies with a solid history of paying dividends, ideally ones that have a track record of increasing their dividends consistently.
So what kind of track record are we talking about? Like 5 years, 10 years?
I'd say aim for at least 10 years, if not more. It shows the company's commitment to returning value to shareholders, and it can give you some peace of mind.
And what about the dividend yield? I've heard that term thrown around a lot.
Right. The dividend yield is the annual dividend payment divided by the stock price. So a higher yield can be attractive, but it's important to look beyond just the percentage.
So it's not just about the yield number?
Exactly. A really high yield could be a red flag. It might mean the company is struggling. You want to find a balance, consistent growth, and a reasonable yield.
That makes sense. So once you've picked a few stocks, what's the next step in building this snowball?
Start by setting up a dividend reinvestment plan, or DRIP. It allows you to automatically reinvest your dividends to buy more shares without any commission fees.
Oh, that's helpful. So it makes it even easier to grow your investment over time.
Yeah, it removes the friction. You're not having to think about it. Just let it roll,
And how often do dividends typically get paid out? Monthly, quarterly?
Most companies pay dividends quarterly, but some do it monthly or even annually. It's good to check the payment schedule when you're investing.
So let's say someone starts this snowball now. How long does it usually take to see a significant impact?
Well, it varies, but generally if you're consistent and patient, you could see some meaningful gains in, say, 5 to 10 years.
Wow, that's not too long, especially if you're thinking long term.
Exactly. And the beauty of it is that the earlier you start, the better. Time is your friend when it comes to compounding.
I see. So it's all about being patient and letting it grow over time.
Right. And even small investments can lead to big outcomes, especially when you're reinvesting those dividends.
So what are some practical tips you'd give to someone just starting?
First, start small if you need to. Even $50 a month can make a difference over time. Just be consistent.
And I assume it's good to diversify your investments too.
Yes, absolutely. Don't put all your eggs in one basket. Spread your investments across different sectors, and maybe even consider some ETFs that focus on dividend-paying stocks.
That sounds like a smart approach. So what about tracking your progress?
Keep an eye on your dividend income and the overall growth of your investments. There are plenty of apps and tools out there that can help you manage and track your portfolio.
That's great to know. And I guess it's also important to stay informed about the companies you're investing in.
Definitely. Keep up with news and reports about the companies in your portfolio, and be prepared for changes. Sometimes companies cut dividends, which can be a warning sign.
Yeah, nobody wants to see that happen after investing.
Exactly. So staying engaged and informed is key.
So to wrap up, we've talked about picking stocks, reinvesting dividends, but I'm curious about the common pitfalls people might face with this strategy.
Oh, there are definitely some traps to watch out for, and we'll dive into those next.
Perfect. I can't wait to hear about them. Thanks, Alex. So Alex, today we're diving into something really interesting. The whole idea of the dividend snowball, right?
Absolutely, Jordan. It's a powerful concept, but, there are definitely some common pitfalls people fall into when they start investing in dividends.
Yeah, I can see how that could happen. What do you think is the biggest mistake people make?
Well, one of the biggest mistakes is chasing high yields without really understanding the underlying company. I mean, it's tempting, right? You see a stock with a high dividend yield, and you think, wow, that's great.
Right. But it's like, what's the catch?
Exactly. Sometimes those high yields are a sign that the company is struggling, and they might be paying out unsustainable dividends just to keep investors happy.
That's a great point. So what can people do to avoid that pitfall?
Look for companies with a solid track record of dividend growth. Consistent history of increasing dividends is usually a good sign.
So it's not just about the yield, but also the stability of the company?
Yes, exactly. And another common mistake I see is not diversifying. People tend to put too much into one or two dividend stocks.
Oh, for sure. I can see how that could backfire.
Right? If those companies hit a rough patch, it could really hurt your income stream.
Have you seen any real-life examples of this happening?
Yeah, actually. I had a client a few years back. They were really excited about a tech company that had a high dividend yield. They put a significant portion of their portfolio into it.
Oh no, what happened?
Well, the company faced some unexpected challenges, and their stock price plummeted. Not only did the dividends get cut, but they lost a big chunk of their investment too.
That's tough.
It is, and it serves as a reminder that, doing your homework is crucial.
So what should they look for when they're researching companies?
Look at the dividend payout ratio. It tells you how much of the company's earnings are paid out as dividends. A lower ratio can indicate a more sustainable dividend.
So if a company is paying out, say, 30% of its earnings in dividends, that's a good sign, right?
Exactly. It leaves room for growth and reinvestment, which is essential for long-term success.
That makes sense. What about the timing of buying these stocks?
Great question. A lot of new investors think they need to time the market perfectly, but that can lead to major stress and mistakes.
Yeah, I mean, who can really time the market?
Right? It's much better to focus on a long-term strategy. Consider dollar-cost averaging, where you invest a fixed amount regularly, regardless of price.
That sounds way less stressful.
For sure. And, another common pitfall is not reinvesting dividends.
Oh yeah, I've heard about that. People miss out on compounding, right?
Exactly. If you're taking dividends as cash instead of reinvesting them, you're really missing out on that snowball effect over time.
So it's like you're stunting your own growth.
Yes, and many people don't realize how powerful compounding can be. Even small amounts can add up significantly over time.
Can you give us an example of that?
Sure. Let's say you invest in a company that pays a 4% dividend and you reinvest those dividends. Over 20 years, that can turn into a much larger sum than if you just took the cash.
Wow. So the earlier you start, the better, huh?
Definitely. And another mistake is ignoring fees.
Oh, right. Fees can really eat into those dividends, can't they?
Yes, they can. It's important to choose low-cost investment options, like index funds or ETFs that focus on dividend-paying stocks.
So keep an eye on those expense ratios.
Exactly. And, some people also forget to review their portfolios regularly.
Oh, that's a good point. Life changes, right?
Yes, your financial situation or goals might change, and it's important to adjust your portfolio accordingly.
So how often should people be reviewing their dividend investments?
I'd say at least once a year, but if there are significant life changes, you might want to do it more frequently.
And what should they be looking for during those reviews?
Look at the performance of your dividend stocks. Check if the companies are still strong and assess if the dividends are still sustainable.
That makes sense. It's kind of like a financial checkup.
Exactly. And, one last mistake I see often is focusing too heavily on past performance.
Oh yeah, I think people can get stuck in that mindset.
Yes, just because a stock has performed well in the past doesn't guarantee future success. Always look at the fundamentals.
So keep learning and stay informed.
Absolutely. And remember, investing is a journey, not a sprint.
That's a great way to put it. So Alex, if someone finds themselves in one of these pitfalls, what's the best way to recover?
Well, first, it's important to take a step back and reassess your strategy. Identify what went wrong and learn from it.
And not to be too hard on yourself, right?
Yes, exactly. Investing is all about learning and growing.
So focus on the long term and make adjustments as needed.
Exactly. And, seeking advice from a financial advisor can also be really helpful.
Good advice, Alex. Thanks for sharing these insights today.
My pleasure, Jordan. It's all about helping people make informed decisions.
Absolutely. And we'll be back next time with more practical tips for our listeners.
Looking forward to it. So, Jordan, we've talked a lot about the dividend snowball effect today, but, what do people do next? How can they start putting this into practice?
Right? It can feel a little overwhelming, but honestly, it's all about those small, actionable steps. So, where should someone start?
Well, the first thing I always suggest is to take a good look at your current financial situation. Figure out how much you can actually invest.
Yeah, budgeting is key. It's like, set aside a little each month for investing. It doesn't have to be a huge amount, right?
Exactly. Even starting with, $50 a month can make a difference. And then, think about setting up an automatic transfer to your investment account. That way, you're making it a habit without even thinking about it.
Oh, I love that idea. Automating things just makes life easier, and it keeps you consistent.
For sure. And then, once you have that budget in place, you can start looking for dividend-paying stocks or ETFs. There are some great apps out there, like Robinhood or M1 Finance, that let you trade without hefty fees.
Right? And they often have educational resources too, which is super helpful for beginners.
Yeah, and don't forget about checking out platforms like Yahoo Finance or Seeking Alpha. They provide a lot of data on dividend yields and company performances. It's important to do your homework,
Absolutely. And speaking of homework, reading is another great way to build your knowledge. There are some excellent books out there on dividend investing.
Oh, for sure. The Little Book of Big Dividends by Charles B. Carlson is a great one. And Dividends Still Don't Lie by Kelly Wright is another solid choice.
I've heard good things about those. They break down concepts in a way that's really easy to understand.
Yeah, and they also help you think about the long-term mindset, which is crucial for building that snowball effect.
So let's say someone decides to start investing. What are some habits they should build along the way?
Good question. One habit is to regularly review your portfolio. Maybe, set a reminder every quarter to check in on your investments.
Right, and that doesn't mean you have to panic if something dips. Just keep an eye on the overall trend,
Exactly. And, staying informed about market trends and news can help. Subscribing to a couple of financial newsletters can be useful for this.
Oh, definitely. Plus, engaging with a community, like online forums or social media groups, can provide support and new ideas.
Yes, it's amazing how much you can learn from others who are on the same journey.
And speaking of communities, don't underestimate the power of networking. It's always beneficial to talk to friends or family about their experiences.
Totally. You'd be surprised at how many people have insights to share or even know someone in finance.
Right? So if someone's thinking, okay, I want to start small, what would you suggest for their first investment?
A great first step could be a Dividend Aristocrat ETF. These are funds that invest in companies with a long history of increasing dividends.
That sounds like a safe bet, right? You're getting exposure to multiple companies instead of putting all your eggs in one basket.
Exactly. And then, once you get comfortable, you can start picking individual stocks. Just remember to diversify your investments, you know?
Yeah, spreading it out really helps to manage risk.
And don't forget that reinvesting those dividends is key to growing that snowball.
Right? It's like if you start with just a small amount, over time, those reinvested dividends can lead to more shares, which means more dividends.
Yeah, and honestly, that's the beauty of compound growth. It's like a snowball rolling down a hill, gathering more snow, or in this case, dividends.
Love that analogy. So, if someone wants to take action today, what's the first thing they should do after listening to this podcast?
I'd say just sit down and create a simple budget. Figure out how much you can allocate for investing each month, and then open an investment account if you haven't already.
And maybe even pick a book to start reading, right?
Definitely. That'll get your mind in the right place for this journey.
So it sounds like the key is to start small, build good habits, and stay informed along the way.
Exactly. And remember, it's a marathon, not a sprint. So take your time and enjoy the process.
Perfect way to put it. And I think that wraps up our discussion on the Dividend Snowball.
Yeah, I hope everyone feels a bit more empowered to start their investing journey.
Thanks so much for sharing your insights, Alex.
My pleasure, Jordan.
And for our listeners, we'll see you next time on Prime Wealth. Wow, Alex, I feel like we really unpacked a lot today about the Dividend Snowball strategy.
Yeah, absolutely, Jordan. It's a fascinating concept, right? So just to recap.
Right. Let's hit those key takeaways.
First off, investing in dividend stocks can provide a steady income stream. And, reinvesting those dividends can really accelerate your wealth over time.
Exactly. That compounding effect is so powerful.
And then there's the importance of diversification. Spreading your investments across different sectors helps reduce risk.
Totally. And let's not forget about doing your homework. It's essential to research the companies you're investing in to ensure they have a solid track record.
Yes. And of course, remember that patience is key. This isn't a get-rich-quick scheme.
Right. It's a long-term strategy, but it can really pay off if you stick with it.
And speaking of sticking with it, I just want to encourage everyone out there. No matter where you are in your journey, it's never too late to start investing wisely.
Exactly. If you found today's episode helpful, we'd love it if you could subscribe, and share your thoughts in the comments.
Yes. And if you know someone who's over 40 and looking for financial guidance, share this with them.
Next time, we're diving into peer-to-peer lending, risks and rewards. It's going to be a great conversation.
Looking forward to it.
All right. Thanks for joining us today, everyone.
Take care, everyone.
Bye for now.